little late start to the final hour here, but it's just after 3 o'clock Eastern time on the 29th. We are wrapping up the month here tomorrow. Let me get the screen share up and running. Just finished up a live session and masterclass for my daily profit play. Pretty crazy day. It was a lot of volatility. Turns out to be so far pretty darn efficient. This would mark the efficiency of the day. So we started here, had about a plus minus 40 on the day, and markets are clinging to it. Now, interestingly enough, I think I did a 5 wide here. So for 10 cents, I have a potential $500 profit trap right at that sticky point in case we go up. I was looking at, we talked about this week in a little bonus trade, 3 p.m. onwards, if we have like a very cheap sell off at the end of the day. However, it's not really the criteria that I like to take that trade because we are not, overstretched for the day, which usually the market will drop. Today is the day that we were oversold and the market came right back to equilibrium. So I will be cheering on a couple levels from my man Larry out there. Needs to have price above 69.25. I think he already closed out for profit because we just finished that masterclass. So kudos to Larry for a nice win. We're looking at a full winner with price needed to stay above 6,900 by end of day and below 70.35. Also a full winner with price needed to stay below 69.75. So winner there, and then greater than 6,900 winner there. And then I've got some defense trades that basically I'm gonna lose a couple bucks on the day. Net. Here was the way that stacked up today. Also, want to take a quick peek at Microsoft. Microsoft is trading at 424. Oh baby, this trade's got to be even better right now. Which I'm kicking myself for taking a smaller win. 690. Let me see what this update was. Bonus trade. Yeah, it's about the same now, so pretty good. This is update. It is 3:20 p.m. Eastern time. The put fly with price now in the trap area is showing 6.80 to 6.90 credit for a bigger profit. So that trade originally cost us $1.30. $1.30. It's trading for 6.80 right now. I mean, you make $550 on that trade. The other trade, you're down $1.57. So 550 minus $1.57. I mean, that Microsoft, we did a two-sided butterfly trade in my earnings play for Microsoft, and it's up $393 net. So we traded it literally up and down, and right now it's showing a net profit of $393. This was the one contract trade. That's a pretty good winner. I closed it out way earlier today because a lot of crap was happening. We've got standard trades running on daily profit play for SPX. We got gold and silver making all these crazy movements. We got outlier type moves happening like instantly in the first hour of the day. So when Microsoft gapped lower after earnings, it started to push in my profit trap. I closed it for about $100. I ended up netting, I think I netted like $85 on the day, but so $85 on Microsoft. I closed out a broken wing winner for $330. And then I have $250 with my two winners on daily profit play. My defense trades minus minus 95. And the other one was for, I think I did it for $2, minus $2. So I'm up 370 on the day, and that's fine. That's fine. So it's, not a big deal. Also, I was able to dip my toe in the water for gold for the first time in a while. So I've been very patient on gold. Mike's been asking me for final hours for weeks, and I'm finally in them. We'll get them, but obviously that's why you're followers and you're in Discord and you're in Telegram, and I'll pop in here every now and then. I finally was. I mean, I have not stopped teaching all day. Like I did a almost a 2-hour masterclass for daily profit play, rolling right into final hour. We'll do another one tomorrow. So it's been a busy week, but all in all, a pretty good week. And here is trying to think here. I want to go to gold for a moment. So just a huge shakeout in gold. The candle itself, high to low, is about 9%. Now, what I'm going to do on GLD is I dipped my toe in the water at 474 today and bought some gold. Now, that's a small allocation. I put $2,000 at it. I'm going to go $2,500 on a pullback and another $5,000 here on a pullback. I'm actually going to get these trades in right now because these are penny notice. These are much easier to get filled, obviously. The only issue is, I don't know I don't know if this market is going to start making a top and moving back towards this 200-day moving average. It should. Technically, it should. Okay. But if it doesn't, then at least I've got some more skin in the game, which is adding to this position here. So I'm already in about a 1% position here, and I'm adding another 1% position here. So net, my break even's on gold about here. This is going to be like a 2% allocation and another 2.5% allocation. So I'm trying to build up gold to about a 5 to 7% position, and reestablish. I mean, between gold and silver, I really like gold a lot more now. My silver trade uh, was great, but I'd feel like, oh, I left a lot on the table, because everybody feels that way. When it's up 160% in a year, you feel like you left some on the table. But I was up, 100 and plus. I mean, silver was great. I was in it from $20 to almost $50, but it blew up to 120. So I guess that upside is, oh, I shortchanged myself, but it was still a great trade for 3-4 years. Now I have participation from the October levels, and I'm in some trades that are getting the exposure to gold and silver. But I'm looking to re-enter, reallocate, get my percentages built back up to keep this a running piece of my portfolio. Okay, so I'm going to get these in, and technically I don't have to do this now because I can do this after market and get these pending orders in. But I'm looking to buy another chunk of shares at 405 on GLD, and then another chunk of shares here at 355 on GLD. So those would be dollar cost average levels. In addition to that, I'm also going to see, if the implied volatility changes at all, I also might throw in a couple ratio spreads down here into the maybe low 300s. In fact, I'm looking at that right now. So let's go GLD. IV rank at 121. Oh my gosh. Let's try to sell some premium. December 2026, end of the year 2026. Does this look good? Either December, January to like a 300 strike. It might be offering like next to nothing, but if it offers me some premiums, 300. I mean, it's an income trade. Income trade. Let me go to January. Let's go January. Let's go to 300. I mean, that's not cool. 300 still offer me a buck. Let me try like the 3. I mean, 300 is like way, way, way down there. This is 339. I mean, 320. Let's look at like the 320. 320, 310. Look at this. Look at this price. If I buy the 320, sell the 310 with 2 contracts, I have to pay $13,000. Like, is this price just absolutely broken? What the F? That's insane. If I sell a put, I get $1. I could. That's crazy, man. Let me go 315 maybe. Like, this is a little bit better. I get a $5 trap, $1. It's like it's barely an income trade. But if I want to own some shares of GLD, this is not a bad place to start. So let me see. And I hate that this is embarrassing. Like $1.60. But if I own it, then I get assigned at 310 minus 5 minus $1.60. I own GLD at 303. That's a pretty hefty discount. From this high all the way down to 303, I would own the shares at about a 40% discount. So the chance of assignment is little to nothing. I mean, it's way outside the expected move here. Look at that. Expected move is all the way down to like 380. I mean, I'm giving this thing a lot of wiggle room. But I'm going to not fart around here. I think that this type of craziness and volatility could mean all sorts of stuff. And I'd rather dollar cost average and test versus if I'm going to own 100 shares and I'm going to allocate, 15K margin or buying power, 30K cash. I feel a lot more comfortable doing it at a massive discount. Okay, so I'm going to take this trade on a margin account, see if I can get filled. Let's try to get like a buck. Let's try like $2. I don't know. This might be nuts, but let's see if we get filled for $2 on a margin. Let's try $2 here. Probably not even close. So 320, 310 working. Oh, I'm sorry. What's that? Oh, those are shares. Okay. So I'm just going to do the option trade here. So a 315, 310. Let's try this for I'm just going to go down 10 cents and see if it gets filled. If I get a $1.50 or better, I'm okay with the trade. Three, see $1.80. And this might have no shot of getting filled, but if I can, it's just gonna be a good income trade for Project Options Edge. I'll try the mid price at $1.65. You know, the bid price is 30 cents, so I could be asking for way too much here, but I'm gonna try. Let's go $1.60. Hopefully $1.50 or better, but I'll go $1.55. All right, $1.45 is probably the lowest I will accept on this trade. $1.45. I also think the bid ask is just wide based on price action today. All right, I'll fudge it. I'll come back to that later. I'm just going to get my dollar cost average levels in 405 and 355. I can do that after market because those are pending orders. So I'm going to get more shares added in. Price for the day. I was looking at this trade. I talked about this bonus strategy where, you know, near the end of the day after 3 p.m., if you look at a sell opportunity or you look at like a, you know, it's a bear put spread. So you'd buy like 5 points out of the money and then sell, you know, 5 to 10 points lower. The goal is if you do a 5 wide, you want this to be less than $1. If you do a 10 wide, you want this to be less than $1.50. But I looked at the trade. It was like, I think it was 90 cents for a 5 wide. And we're also, like I said earlier, we're not at a high of the day. You know, this is down, up, and we're kind of hanging out in here. I could see price doing little to nothing. You know, maybe it gets up into this. This is positive, negative gamma, positive and negative gamma at 69.60. I actually put a tiny little profit trap in here for 10 cents. So I've got, you know, maybe a $500 winner here if I'm lucky, but I'd have to be lucky. If we stay here at 38, I'm going to win, you know, $250 on my daily profit play trades today with my net winners, and I'll be up like $350 for the day. Anyway, I didn't want to take. I didn't take the trade. It would have been like a 30 by 25. You can look at it right now. It's already 330, so I wouldn't take this trade. But we're also, like I said, it didn't fit my criteria to be at the highs of the day. See, I already have it. So this is 60 cents. 60 cents. If we drop, it's trading at 38. We need price to drop to 25. So you need like a 15-point drop to get this thing paid, but it's going to cost you 60 cents to get paid $5. So for the end of the day, like it's a pretty cheap trade. That trade is 75 cents, 80 cents. I mean, again, if we dropped 18 points in the final 30 minutes, like that could be a banger of a trade, right? You're up $900 to only risk 80. Even if it cash settles, you have like high reward to risk. However, it's a trade that probably doesn't have downside into it. I don't think the market's going to fall apart in these last 30 minutes. It probably is just going to hang out here because it was like head spinning volatility. There's a high, there's a low. You can draw a fib on here. Check this out. If I put on a fib, where's my fibs? Here it is. Is this it? Was. Add study. No, I'm trying to put, oh, here it is. No, it's not letting me. Let me park this. Hang on. There we go. All right. Now I got it. Okay. Can everybody see this? So I take my fib from this high today to this low today, and price is hanging out right in between the 50 and 61%. So the market just kind of fought its way back from a wild and crazy volatility morning, and it's just right back at equilibrium for the most part. Okay. And, you know, and we like, we had a really intense live session. You want to see some, you know, dig your heels in, trade your face off type days. Today's live session we did this morning for my daily profit plan was pretty wild. So, you know, and we come out ahead, which is always nice. We got some trades to manage for tomorrow, which is fine. We'll see where prices are going to be pushing or settling, and we'll keep an eye on things. But SLV, let's see. There you go, Mike. Let's see. Gotcha. Okay. SLV, we'll take a look at that one. Aussie yen, we can take a look at that one. Sure, let's look at currency strength for the day. Currency strength, a lot of snapperoonies. Here's the Aussie getting beat up and then snapping back. Here's the yen on top, then snapping back. CAD, yen, and Swiss on top today. But really, after some exciting volatility around, looks like 10 a.m. this morning, this is a bottom here at 1045. This is a top here around 1045. All the outlier strength and weakness kind of came back in to rebalance. So not a ton of volatility on the currency side, despite the kind of the blowout move on the Aussie and the yen earlier. Silver. So the reason I'm not like jumping for joy to get back into silver is because I just got out of silver like October last year, and I was running. I mean, I've said this, like I was long silver in here, I was long silver in here, I was long silver in here, and I took profit there. So profit, profit, profit. And when I was done with that, I got back in on that 15% correction, and I'm now up on silver to current prices. It is not a big position. I wish it was, but it's not. But the reality is, look at this MFR. This thing is ridiculous. But it's up on my pullback here. It's like this thing's up over 150%. That's way more than what I expected. I took a trade that was like 130% win. That was a 3-year campaign trade. Now in one little pullback, I'm up 150%. What do I want to do on silver? Okay, look, I don't know what silver has in plan or in store for us. What I do know is watching the gold and silver ratio, this is not the time that I would say silver is a better play. Silver is a terrible trade right now compared to gold, because when we get the average or the historical norm between this gold and silver ratio, this is the time to start allocating into gold, not silver. Okay. Now, I'm just saying that from the perspective of, based on this ratio, this is usually when gold outperforms. Now, they could both go positive. They could both be up. But silver has been so far overcooked and so far overstretched. Like the chart is straight up and it's parabolic and it looks like it's broken. This is a daily time frame showing overbought conditions. It hasn't stopped it from going up. Any type of pause or hesitation. Look, charts don't look like this and stay like this forever. There's going to be a shakeout at the top. This is what today feels like, to be honest. Like this feels like a shakeout. I could see some candle. And look, it's so volatile that tomorrow might be a freaking new high, And so don't hold your breath. But I would say just don't chase this crap. This is going to get everyone on board, everyone late to the party, everyone thinking like, what do we do on silver? Here is, I think I joked about this morning, but my fiance's grandma was asking about silver yesterday. And I literally said, that's the sign of the top. That was last night at like 9:00. So, Granny, you called it. Okay. Now I say that because this is not the time to be buying. Like if you want to look at a chart like this, this is my play. If you want to get in some silver, you get in and you hold your breath and you add some more down here with a better position and a better position and a better position, and you establish an investment level. That's what you do. As opposed to, I'm all in right now with a tight stop loss. No, thank you. You are going to get rattled with volatility up here. This market is, the daily swings are insane. I mean, today's candle alone is another 12% candle, right? This was a 15% candle. This was a 15% correction. These are happening so fast. So it's head spinning volatility. I would not try to invest at these highs and say that's going to be my best break even price. If I want to invest, remember we had like a 40-year high at $50, 1979, 2011, and it just hesitated here in 2025, and now it's back up and ripping above these levels. $50 to me is like the floor that I'd love to buy some more at. I just don't know if we're going to get there. So even at the very least, if you take this dip and wait for a fib, and and maybe you hate this because you don't want to wait. But if I just looked at that from a technical standpoint, can we pull back 23%? Can we pull back 30%? Can we pull back 38%? If there are buyers that are so hungry to take this thing up, then they'll buy it down here. If it gets there, there will be buying interest. If it gets to equilibrium, there will be interest. If it gets to the golden ratio, there will be interest. So bulls should be looking for these levels in big ways to push this thing higher. My concern is it blows the top off and it starts to just fade it, backfill this thing, and everyone that was chasing silver is going to sit in a drawdown. And I don't want that to happen. So I'm just going to be patient, dollar cost averaging. Okay. All right. Really quickly, let me make a quick adjustment here for a little profit trap at the end of the day. Maybe I have one. It is right here, filled. Okay. What is this guy? All right. Yep. So this guy is a end of day trap. This guy is an end of day trap. Okay. So this one maybe add into the gain today. So I've got my daily profit play. That was good for 95 cents. This one's good for I'm going to be up 150 bucks on this one. This one is up, 45 bucks. If we get to, I mean, heck, 20 minutes to go, if we get up to like 55 or 60 where that sticky point is, this actually might help me net some profit on the day. This one could pay me. This is a 10-cent debit. Could be worth 490 bucks if I'm spot on at 60 today. Good question there, Chef. You can just highlight the trades. So if I go, I'll just do this again. So let me ungroup them. So I find my contracts here. So 1, 2, 3. These trades are all together. So I'm just going to add them. I go group position, and then I just type in. That's my label, end of day trap. So there's my trade. So you highlight the trades and then right click and go to group positions. Yep. All right, let's see if we can sneak in. So 10 cents. I mean, I'd love to get like a $1 to $2 profit trap, but this thing could pay up to 490 bucks. Let's see if we can find a little sticky 69.60 this morning or today. All right, let me keep an eye on this one. I'm gonna try. So this max is at $5. Let me see if I can sneak in a sneaky little 390 credit here. And that's being like greedy, but maybe I can sneak in. Let's see, 290 would be great. I mean, fudge it. We might as well go for it, right? Try to make 400 bucks on this trade. Why not? Okay, so I'm in for 10 cents. It can cash settle at $5 if I'm right at 69.60. If we're going to keep melting up a little bit, this is that sticky point at 69.60. If we get there, I'd love to see it. It might not, and it might be a waste of 10 cents, but there's a chance. So I'll try to grab a net winner there if it's close. Let me keep an eye on this on my other screen. What's that from Larry? I'm up 135. Larry, is that 135 on top of the 210? So Larry, bro. I mean, Larry, you might just want to take the rest of the year off, my friend. No, man. I mean, look, dude, you know the deal. It's just trading, and you are trading in a 0-day environment, which means you know how to make money. That gives you the freedom to not have a lot of the excess exposure, whatever the market does. It's like your goal is just to win the day. But that's awesome. Phil says, does not seem to give me that option to label them. Are you on the desktop platform or the web? Desktop. I'm using the desktop. You can label them. Let me see if I can find a trade here. I put on a trade. Where was it? I'll just find a bonus trade. Maybe these project options edge. New trade on EEM. Here, I'll show you. So here's EEM. This is a trade I took for project options edge. EEM here. So I bought some shares, and then this is a 55 by 50. This is a ratio spread. Look, I'll copy this. and I'll right click, go to group positions, and I'll call it ratio project because it's one of my services called Project Options Edge. And there's my trade. So I took this trade in for $1.60 and I'm down $30, but it's a trade that's, out for the year. So it should work. 463 for the year, dude. That's amazing, man. I mean, literally, Larry, the market's like flat for the year, my friend. That's so awesome. The market's flat for the year. Larry's been trading for like 2 weeks, and he's up $460,000. Larry, I want to be like you when I grow up, man. All right, we're at 69.50. Let me keep an eye on that profit trap, and I'll go through some other top-down stuff. Give me some chat. What else you want to go through today? We did some currencies. We'll take a look at some currencies. Gold, silver is really the big, it's kind of stole the show today, created some volatility. Post FOMC earnings on Mag 7. Microsoft was down. We had a nice profit trap on Microsoft for newsbreakers. Meta was up. I think we eclipsed 700 plus on Meta. Let me go back to SPX and see this profit trap here at the end of the day. Okay. 49. I mean, come on, man. 55 is all I need. 55, 60 would be great. Get to that sticky point. Steven, Broken Wing Butterfly Education saved my behind today. Turned the potential 12.5 loss into 3.95 overall profit. Love those traps. Good, man. That's good work, dude. Good work. Yeah, I bet it was. I mean, Larry, we talked last week on Friday, dude. I mean, you're up $100 and some $1,000 since I talked to you Friday, not even a week ago. So I'm just as I said, I'm happy for you. I'm your biggest fan. But I'm sure you had some red this morning that was a little unpleasant. I saw the levels you put on this morning, and I went lower, right? I was lower on the put side, higher on the call side. I used the even though the gamma was very stretched and high and low, it's like I just used it. The reverse iron counter worked out great. We closed out for $6, closed at 505. So that's a winner. And then the standard daily profit play was right here. And this will close for the full 150 today. So 250 on the day for daily profit play is always good. And then I'm trying to get a little bit of defense in here. This one's close. For 10 cents, it's all or nothing. I'm not going to micromanage this trade, but I'd like to take some profit out of it if I can. Because the way the day is going to settle for me is Microsoft profits, Broken Wing Butterfly profits, daily profit play profits, and then a couple of traps in here. If this can give me an extra, $100 to $200, I mean, that's a pretty good win on the day. I'll be up like $500 or $600 total. So we'll see if we get another push here in 15 minutes. Let's try to get to 60. And I say that just because 60 is right here. It's right at the start of this like breakout point, and it is right into the positive and negative gamma on the day. So that makes, realistically, that makes tomorrow a really interesting monthly close, because could we get back to, highs again from 7,000? Yeah, we could test 7,000 again tomorrow. It's doable, right? We could go up to 7,000. We could also break the structure. What goes down is kind of the impulsive move. Market pulls back here and then rolls over to finish the month. I don't know. But I'd like it to stay stable, because if we're hanging out right here, we have a profit trap opportunity in my bonus trades. We have an engineered options, which would be three? We have 3 winners. We could have 3 winners on engineered options tomorrow, because we got filled down here. So if we have 3 winners on engineered options plus a bonus trade, tomorrow could be fun. And let's look at this from the alignment side. Here is the 1 hour chart, right back above the 144, 4-hour chart. Bouncing intraday off the 50 period. The daily, I think we tested the daily 50 day. We tested it when that sell-off happened last week. So we tested 50 day, closed back above, just a lot of volatility. Another kind of poke at the 50 day, and it's, off that level. It's like, it just continues to be, and, it's their support, even though it broke through it, it's like it snapped right back. There it is, snapped right back. Testing up, testing up, testing up. So, this 50 period is really, really important to this market. And if it breaks and follows through, then we're probably dropping, to this kind of opening space, which is not going to be fun. That's how the market gives us like a maybe 5 to 10% correction. But it is still like hanging in there with this 50-day, 50 period moving average doing pretty well. Okay. Look at this. Look at this move on silver, by the way. Silver, just a big Fed indecision candle. Gold, just a big Fed indecision candle. I think gold had like a 10% swing today. 9% on gold. I'm just glad that I got some skin in the game. I made this kind of. I just had like a correction warning. I was on an interview with Unfiltered Finance with Emily Turner, and we talked about this. It was kind of it's just a correction warning. It's not being bearish on gold. I'm bullish on gold, but a warning is we are 30% away from the 200-day moving average. I've never seen it get that far away from the 200-day on a daily time frame and be at like 590 bars since the last time we touched it. So I do think that there is some type of shakeup coming sooner than later for this market to work its way back down in some capacity. I don't know what it looks like. I can draw you all sorts of bearish patterns, and I'll try to figure out what exactly it's going to be. I'm not bearish on gold. It's just trying to get levels to measure and trade that I want to buy some more. Oh, baby, 59. Let's go. Where's it at? 105, 118, 162. Heck yeah. Let's go. 155. Give me a fill. Don't sneak past me, you turd. 145. This will help me net on the day. Come on. This thing can maybe cash settle, but it's got to stay above 55. It's really, really tight. Let me see. Oh, come on. We're 10 minutes away. Give me a. All right. I just grabbed another $120. Hey, guess what, everybody? We played defense. We netted some profit. Now we can add this to the mix. So 330 plus 85 plus 250. Sorry, plus 150. Plus 95 plus 120. Now my defense trades minus 95 minus 200. 485 in the day. And, could I have waited longer and try to get this thing to settle in 9 minutes right at 59.60 or 69.60? Sure. Maybe it does, but I'll take the win, and, I'm happy on the day. So we played defense. We won. I traded my face off. I mean, I myself am in 11 trades today for my entire account, up 27 trades. That's nothing because I've got another, 34 trades to post after market. So it's definitely a busy day. Let's see where this thing settles. Now, what's going to be interesting is this $1.30 is either going to be up to $3, $4, or it's going to be down to zero in the next 8 minutes. We'll find out. But if it hangs out at 55, this swings there's nothing. If it's at 57, 58, 59, 60, it's maxing out at maybe $490. Okay, let's see what happens. Okay, so gold, silver, good. What other questions do we have? Love the profit trap, Steven. That's awesome, man. I'm super happy for you because that loss is never fun. So that's a big old flipperoo, right? 12.5 and closing for profit. So really happy with you. Just filled on the fly. Added that one. Nice. So we're at 58. I'm just going to keep an eye on this one for fun. Right now it's up to $1.60 ish. So 10 cents. It's now up $1.50, $1.60. And in 8 minutes, I mean, this thing could be perfect. If we're right at 60, like that's worth 400 some bucks. And look, I can beat myself up a little bit, but I try not to get too mean when it's like, oh, you should. I mean, nobody knows what's going to happen in 7 minutes. We could test 60 and fall 5 points. We can blow through it and go to 65, 66. I mean, this thing might try to hit 7,000 tomorrow, which is why we also have a 15 wide profit trap at 7,000. Like I just wonder if the market's like, you know what? We appreciate your sell off. We will take your 1%, right? Whatever this market did today. Market says, okay, we'll take that 1% drop. Market was down 1.5%. And what is it doing? Buying the dip. Right? Buying the dip. So it's, Not losing your cool, understanding that this week, and I said this all week long, I've never seen a week with FOMC that doesn't give us volatility. And I was right. Why? Because I've seen this crap for a long time. Like FOMC is not just like, nobody cares anymore. The market cares. Like even though FOMC was a nothing burger yesterday, there is packed volatility in this market. You throw Mag 7 earnings, FOMC, like it's just an excuse, plus end of the month. It's just an excuse for the market to move. So what did it do today? Shook out a bunch of people, and I don't even know why it was selling off. Like, why the hell did the market sell off this morning? Anybody know? I don't know. Was there news attached to it? I have no idea. So it's a 1.5% correction, and the market using it as an opportunity to rip back up. Now, are we breaking these highs yet? Not yet. But what we are doing is we are definitely struggling to make convincing highs, right? So, I mean, this is kind of what the market is establishing is high pullback, high pullback, high pullback, high pullback. That is going to be a grind. If it continues doing that, that's not going to be fun. But if we keep edging out slightly higher highs, then this and like this is going to lull some traders into like just buy every dip. If this thing goes sideways and rolls over, like I don't want to be wrong here. Like I just want to be patient. And here we are at 61.62. Look at this piece of shit. So that $1.80 is now down to $1.40. Now it's at $1.20. I mean, this thing's probably going to go through my strikes at 65. I'm just glad I closed it. So made $1.20 on it. It's back to 145 now. That's out $1. This is all or nothing in 5 minutes. So if we're back to 60, perfect. If we're above 65, 0. If we're below 55, 0. So I mean, I consider myself very lucky. I don't like doing 5 wides like this because I know that it's very, very difficult to get a perfect pin on a 5 wide. 10 wide, sure. You go 10 wide here, you don't have to be perfect, but if I paid $1 and change, I could get $500, $600, $700. It doesn't have to be perfect. But, for fun, let's see where it finishes in 4 minutes. SPY millions worth of out of the money puts just hit the tape. Yeah, I feel like I missed my opportunity to get that flare up this morning. VIX was up to 19.7. I should have done it. I should have went out to December and sold some more puts on the April lows. I should have, but it wasn't over 20. That's why I didn't do it. Usually, if I see the VIX spiking above 20, I like to sell some puts. So 19.75 was not over 20, so I held off. But I did. I got some good, at least fast action trades in on gold to participate a little bit more, kind of rebuild my allocation up. Just what a silly day, huh? It's just noise, man. I mean, all this is if you trade every single day, it's like, yeah, this is a lot of drama today. But if you trade and passively watch, it's like, oh, the market was down. Oh, look, honey, the market was down 0.2% today. Nobody cares. But when the market's down 1.5% and then rallies back to break even, like that's kind of head spinning volatility. If you do this stuff all the time. Let's see here. Bashy says, how long does it take to learn options from someone? Dude, haven't you asked me that before? Didn't I say check out my practical options course for $27? $27. Get your feet wet in some options. I built a class that is like my nephews were teenagers, and I said, here's a class for you, and I sell it for $27. They got it for free because they're family. But it's like it's enough to understand if you want to be bullish on something, trade an option. You want to be bearish on something, trade an option. It is a calculated bet. The nice thing about an option trade is this. If you are bullish on something, guess what? If the price is here and you think that in, let's say, a month, okay, you look out 1 month, if you think that price will be higher in the future, there is a trade that you could risk 1% of your account. And if price is higher than this by that expiration, you can get paid 1% on that trade. And as price is going higher, if you think that from here and 30 days out, the market's going to go higher, you can risk 1% here. If price is higher, you can get paid 1%. Now, if price is wrong and price is down here, you can still risk 1%. And so even if price goes to infinity or goes to 0, it is a defined risk trade. That to me is way cleaner than getting beat up by the wicks and nastiness of the volatility of Forex and futures, where there's liquidity grabs and block orders and supply and demand. It's way too noisy. When you trade options, it's price, time, volatility, and you're trading with a bias in the market that is like, you know what, just stay bullish and you're probably going to win a lot more than you lose. Just stay bullish, right? So even trading futures options, great. Trade ES, trade MNQ. I mean, you can trade standard futures contracts. You can trade minis or micros, but options are great, man. So I've got the link here. I mean, you can check it out. So I've got a couple things. I'll give you a freebie. How's that? So I've got a $27 course here called Practical Options. It's a quick guide. I have a full course that I do give away with some of my lifetime memberships here. So if you have a full class from me, I give you my full course included. If you want the full course a la carte, that's $497. This one is $27. This is a full session. This is just a 70-minute video. If you just want the video, I'll give it to you. So copy this. I'll post it in the chat. Check this video out. That link is One Trade Mastery. And all I do is I walk through a couple of examples where if you're bullish on something, I use Tesla an example in that video. I express a bullish narrative, a bullish story, a bullish trade in 3 different examples. I buy a call, I do a debit spread, I do a credit spread. I tell you what the trade costs, show you the risk, the reward, what the break-even prices are, and that's 3 different ways to be bullish. All you have to do is have one of them, right? And you can pick and choose what you like. You know, I personally like to trade a lot of option trades. I like to trade a lot of option spreads. I want them to be cost effective, and I like to go after what I think is like, you know, if price is going up, I can just trade income, and stack up a bunch of trades and generate income along the way. You know, I mean, what's been nice is being bullish on gold and silver for the last 12 months. I wish I was more bullish. I think everyone does, but you know, I'm sure there's going to be some normalcy to it. Interesting. We settled at 66, which means that trade right here would have settled at shows 70 cents, which technically would be wrong. If this thing settled at this shows 6968, that would be a full loss at 10 cents, which obviously no big deal. But the fact that I grabbed $120 is a lot better than losing 10. But look at this rally, man. Right back up to the market, breakout point, inefficiency right above the pot. I mean, we're back into positive gamma. Nuck and futs, everybody. All right, let's take a look at flows for tomorrow. This was all red earlier today. Now it is not. Now look at tomorrow's flows. So tomorrow's expiration, end of the month. What do we have to watch for? Well, we're going to have some big gamma coming in tomorrow, 6950, 6,000, and maybe, just maybe, there's a 7,000 handle that starts to light back up, which is only about 34 points away from now. Closing at 69.66. Could we go up 30 points tomorrow? Sure. Could we fall back below 50? I hope it does. Anyone that's in my bonus trades on those broken butterflies, I love less than 69.50 close, and I'd love to stay above 68.75. Right now, mechanically and fundamentally, mechanically and probabilistically, that is looking pretty good for tomorrow. Okay, if we can, and again, if we stay at 69.50, that's totally fine. That's a profit trap, but I'd like to be a little bit lower. Ideally, if we're at 69.40, delicious. If we're above 68.75, perfect. Because we'll have one SPX winner on engineered options, one XSP winner at 686, one winner on XSP for 691. So if we stay here and we have profit traps on those bonus trades. So tomorrow, 3 p.m.-ish, final hour, we've got some trades to manage into the close. If I do see like obvious profits on them, I will start managing them throughout the day. So if you'd like to join me for all that fantastic action tomorrow, come join me for my daily profit plan at 9 a.m. Eastern time. You can get the link if you're in my Telegram, which is right here. So our bonus trades, live session, that was our trade on Microsoft. It's up like, $500 or $600. Net would be like $300 or $400, which is pretty awesome. I did not get that. I got like $85 because I was managing that with everything else, and that's it's my fault. I could have held on to it a little bit longer, grabbed maybe $4, $5, $6 of profit, which would have been awesome. But it is what it is. I'm still happy with it adding to the I guess for the petty cash for the day. Let me go into bonus trades, which I have some more in here. So this is my bonus trade summary. This one is still active, defense, and defense. So 4 trades to manage into tomorrow, and then we have some engineered options to manage into tomorrow as well. If you want to get my Telegram, you want to jump into this with me tomorrow, then you can. Here is my Chris Pulver Telegram. There you go. Yep. So I will have, I'm trying to think here. Tomorrow, what are some key trades? Key trades for tomorrow. I have a bunch of 130 expirations. Let's see here. So I have SPX. I need it to be less than 69.40. That's a trap price. So technically it needs to be less than 50 for break even, but it's at 40. That's a profit trap. I'd say equal or less than. So equal or less than 69.40. Equal or less than 69.50. Or SPX equal to, let's say, 6995 to 7005. That's a $1,000 profit trap. SPX greater than 690. I should say 6875. XSP greater than 691. XSP greater than 686. Where else? If we go beyond 7,000, SPX it'd be around the 70. I'm trying to think what the defense is. I think we did 30 something. So like 70.25 to 70.35. So, I mean, all these levels tomorrow mean some good profit opportunities. But these are all trades that I've done in the last couple weeks. So we'll see where the end of the month gets us. You know, we poked highs at 7,000, 7,001, 2. What was our high from yesterday? 7,002 on SPX. Are we going to get back there tomorrow? Well, we've got a profit trap waiting for it if it happens. And that's worth $1,500. So that covers a lot of stuff in a good way. So anyway, that's going to be some stuff to watch for tomorrow. I like them apples. Hopefully it is versus like, it didn't quite work out. But I'm very curious to see how like the settlements take place. You know, if we're talking in the final hour and we have these trades still running, you know, I'm hoping that one of them is inside of our profit trap and we get, you know, $1,000+ to manage, because that wipes away literally all the risk and all the shitty ones. And we've got maybe $300, $400, $500 net profit. So we'll see. But we're going to make it exciting. That's for sure. Apple has earnings. Yes. Yep. So they have earnings now, right after the bell. Apple pre-market is flat, so they may not have reported yet. I mean, this was like immediate yesterday. If you looked at Microsoft and Meta yesterday, they were all over the place. Meta, I mean, almost filling that entire gap. That move was pretty decent, up 10%. I think we had an average of like 9%. So Meta did what it needed to. Microsoft came right into my butterfly traps. Look at that close though, 433. We were down to 422. That was where that thing was paying like $6, $7 out of $1.30. So I mean, back up here, it's looking worse for tomorrow versus what we had today. So if you were in that newsbreakers trade with me, I'm glad you had a chance to manage some profit. I'm hoping you managed more than I did. You know, I grabbed $85. I'm hoping you had a chance to grab $200, $300, $400 throughout the day. So anyway. If you do the daily profit play on YouTube each day, so I do this. So daily profit plan is a live session where what I do is I come in and I'm just, it's an open trading room. Now I am running services and alerts that are paid for members. So you're not going to get free trades out of me. You're going to get, you know, my teaching, my prep, my talking, my narration, right? My commentary. But if you want the actual trades, I've got members only telegrams for daily profit play. I've got members only telegrams for double ups. I'm sorry, Telegram for daily profit play, for pinch point, for engineered options, for project options edge. And then our classrooms, waterfall income, newsbreakers, double ups. So those are all like member only alerts and signals. But the trading room like this is just open for everybody. So if you want to come in and prep and learn, ask me questions, you know, and I'm always sharing these foundational courses. This is what I do to be profitable every single year. This is a good way to start. Once you're ready to kind of jump into a service and you know, trade a specific strategy, you know, there's a mix here, and this is always a good slide to share. So I've talked about this kind of layout for a while is there's 4 ways to trade the markets, and 3 of them make money and 1 of them doesn't. Okay. If you have a high win percentage, let me change this to black. If you have a high win percentage, but you have a low reward to risk, okay? So if you have high reward to risk, you're over here. If you have a high win percentage, you're up here. The only time you're not going to make money as a trader is if your net result is I have a less than stellar win percentage and my risk is way bigger than my losses. I'm sorry, my risk is way bigger than my winners. So if I average win, $50 and my average loser is $500 and I win 40% of my trades, I'm down here. I'm mathematically, there's no way I'm going to make money. Okay. So daily profit play is this course. We win 89% of our trades, but we are taking on a bit more risk than reward. So on average, and I did the math on this today in the masterclass, we're taking on average about $400 risk for a $100 winner. And if I close out with, even an average winner of $85 or $75, I'm still making money with this win percentage. And our goal is to be higher than this. We need a break even about 81%. So we're at 89. That gives us an edge. We're taking, we've been in this service for a year and a half. We've had over 550 trades. At 89, it's 89.3% profit. So the model portfolio is up like almost 80 grand in the last year and a half. It's just a trade. So it works. Waterfall income. We were running 95% of our trades. Okay. On average, we're doing about $100 income for a $400 risk, and I'd say upwards of maybe $900. So it's a bit more risk. Okay. But 95% of those trades are winners, and we have a profit trap, and we're giving ourselves like a 10 to 15% buffer on a lot of our prices. So I take a trade for income and the market could move, upside, there's no risk. Sideways, no risk. Downwards, the market could fall 10 to 15% and we still don't have any risk. That's a good strategy. So we win a lot of those trades. Project options edge. It's discretionary. I trade a lot of my managed accounts this way. 97% winners. We sell a lot of naked puts. We do a lot of ratio spreads. We income trade. We trade when the market flares up with volatility. It's a way I manage accounts. It's a great service. Okay. Pinch Point. It's a volatility scanner that I built. Finds me great trades with kind of the energy as coiled and pinched and ready to go somewhere. We just put in a bunch of swing trades. 60 days out, 90 days out, let them run. 85% of our trades winners. Not bad. Newsbreakers. We had one on Microsoft. Okay. We're winning about 71% of our trades. Our average is 1-to-1 or better. So think about that. If I'm risking $100 to make $100 and I win 71% of my trades, do I make money? Yes. Okay. The math works. Engineered options, about a 70% win rate. 1-to-1. Do I make money? Yes. Okay. I'm going to teach a bonus course in this one of engineered options. We're going to show how we can make slightly higher reward and risk as well. Double ups. I only win about 60% of these trades, but my winners are ridiculous. It's a lot of butterfly spreads. If you don't know what that is, that's a trade that you get usually like a 5-to-1 or 10-to-1 setup. And all you need is, you can get anything for profit. But if my average winner is like 150% and I win 60% of my trades, I'm going to make a lot of money. So all I'm showing you is however I need to trade, like these services, however I need to trade, these are all in the proper sections where you can make money. Can you make money here? Yes. Can you make money here? Yes. Can you make money here? Yes. Can you make money here? No. So none of my services are there. Crash insurance. That's a hedge service. All I do is I look for like 20-to-1 or bigger, and I hedge out to protect my portfolio. I win about maybe 10% of my trades, but I'm talking 20-to-1 hedges. Like last year, I think I was risking $900 to make $45,000. It didn't pay me, so I sacrificed $900. But if I needed it, that's a big chunk that I could manage a drawdown. Does that make sense? So that class is cheap. It's $97 to try to teach you how to protect your portfolio if the market's being stupid. Okay. Otherwise, learn how to trade. So I say that to say, look, options are great. I've managed a currency fund for a long time. Forex is fine. Forex is pure. Forex is technically efficient. It drives me crazy. It's become very boring. You have limited options on brokers. You got, prop traders and prop firms all over the place. Some are good, some are bad. Do your homework. I feel like people are getting fleeced and smoked all, it's like, who knows? There's probably scams all over the place with prop traders. I also know that the restrictions and the rules that you have to follow as a prop trader, very, very difficult. You could spend months and months and months trading well and trying to level up, if you will. But you have to have it like even more strict to get paid. And what it is they dangle the carrot of you can trade other people's money, you can trade third party money. I mean, if you've truly talked to people that are passing assessments, good, great. It's just very difficult. So, look, I've traded live capital for over 25 years. It's grown over the years. It's a process. It's not easy. It's not overnight. I get it, but there's ways to make money in these markets. Okay. So options to me has become a much more enjoyable way to trade literally price and time and volatility, where price can go up and down or sideways. And I can have a strategy that gets me paid, strategy that gets me paid, strategy that gets me paid. And you will find with options that it is a very fair trade-off. If you want high reward to risk, you're going to sacrifice some win percentage. If you want a lower, like you're going to take on more risk than reward, you can have a very high win rate, right? But you have to manage risk in situations like that. You can also trade the markets totally sideways, right? Every single day, there's a market efficiency. Look, I'll show you what this looks like. Today, in my daily profit plan room, can everyone see these black lines in my chart? This was our plan for the day. Price opened here. This is where the market makers should keep price above. This is where market makers should keep price below. Did that happen? Yes. So even with today's wild and crazy volatility, did the market stay efficient for the day? Yes. That's trading. It's just one of many ways. So, if anybody asks you, what's your favorite? I don't have a favorite because all I want to do is get the job done to be as profitable as I can be. These are different strategies in which I do it. Okay. Join Pinch Point to see the sales webpage. I don't know if I have a replay handy, Chef, but let me do this. If you want to, there's ways to get, so prosperitypub.com, you can go support at prosperitypub.com. That's an email. You can reach out to our team. And you can also call our support team anytime, 904-706-3537. So you can always talk to somebody live and just ask them, anything you want. Any questions on any of these services, they'll help you out. So Pinch Point, there's a scanner dashboard. We get classes every couple of weeks. I haven't done a class yet this year because I did a new launch with engineered options. We also have like 20 open positions that are running and they keep just knocking out for profit, which is always fun. But we're stacked up with some expirations to like April and May. I think that's it, like April, May. So we'll get a class out here in maybe the next couple weeks. Okay. I like the fixed profit. You can get 70% win. Of course, man. And that's what I'm saying. Like if you trade the rules, like what are you trying to do? What are you trying to accomplish? If I can win, think about this. If I'm going to take 1,000 trades, okay. Last year I took like 20,000 trades. If I can win 55% of my trades at a 1-to-1, I'm still making money over 20,000 trades, even over 100 trades, even over 1,000 trades. But when I can carve out win rates of 90%, 94%, 97%, I'm taking more risk on those trades, but it adds up income. When I get the better risk rewards where I'm getting 1-to-1 or 1.5-to-1 or 2-to-1, and I still win 55 or 65% of those trades, even better, right? Like I've explained this, like kind of think about trading. Everybody trades. I don't care what asset you trade. I don't care if you're a Forex trader, futures trader, option trader, whatever your results are, you can plot them on this graph. Where are your results? Where are your strategies? Because if you've taken thousands of trades, which I have, I know where these trades should settle in. I know whereabouts we win. I know what we've been doing for hundreds and hundreds of trades together in these services. So I want to win as much as I can. I realize that some, based on the trade-off of, if I want higher reward to risk, I can't expect a 99% win rate. So if I win 65 or 70% with a 1-to-1, that's great. So anyway, a lot of ways to get the job done. Okay. Somebody asked me Aussie yen again. You picked like the least exciting yen cross. I wouldn't do anything on any yen pair. I said it yesterday. I don't trust the yen at all. So we're sitting up here near resistance. If you want to look at something, I like the idea that maybe this breaks back down. But if we have a breakdown here, I expect the risk off trading to be in the markets. Like equities will probably drop. If the Aussie yen drops, I think the S&P goes down. If the S&P goes up, then I think that the yen is going to continue to weaken. And this is not going to be a cooperative structure. if you've traded the yen at all, you realize the yen is completely on its own island and it does whatever it wants. It doesn't have to cooperate technically. It can, but it rarely does. And I truly hate the yen. I think it is one of the most difficult currency pairs to trade as a currency trader. I like efficiencies. I like pockets. I like Fibonacci's. I like pullbacks. You don't get that with the yen. You'll get the yen to do something like this out of nowhere and then does this for the next 9 months. And then it does this out of nowhere. And who knows what's next? Traders get like, oh, this is what the yen's going to do. And then it doesn't. Oh, this is what the yen's going to do. And then it doesn't. It drives me bonkers. It's not efficient. It chooses what it wants to do when it wants to do it. And it's so hard to trade. So I've told traders for a lot of years, like, I personally am not your expert to talk about the yen. I mean, I look at charts, I look at technicals. There might be a big fat price pattern. Like if this happens, if it's a big fat price pattern and I can, take a swing trade on it, sure. Risk defined. Okay. Reward to risk. If we get lucky, like have this huge opportunity to make money. But if that doesn't happen, I got to stop myself out because you know what? The yen could go up 1,000 pips and not turn back. So my favorite currency pairs are, boring ones. I like Aussie CAD a ton. I like New Zealand CAD a ton. The Swiss pairs have been driving me crazy the last couple of years because I'm trying to stay long with a 0% interest rate central bank that's just not getting weaker. So, Swiss is still at 0% interest rates. Every other central bank, even though they're cutting, are still above it. So there's positive swap. But the Swiss has been, strong for like the last 3-4 years. So, anyway, I like Aussie CAD. I like Aussie New Zealand. I like Euro Pound. I like New Zealand CAD. Dollar CAD is pretty decent. Euro CAD, Pound CAD. Those are all very efficient. Pound Aussie, Euro Aussie, Euro New Zealand, Pound New Zealand. You can ask me about any currency pair. I'll tell you, if it's not the yen, I like it. If you like the yen, that's because you have a plan to get in, follow the trend, follow what you see, trade what you see, and have a plan to get out when you're wrong. If you don't get out when you're wrong in the yen, you will get your ass kicked. If you have a plan to stop out and you're wrong, get out of the trade early and let those winners run. The yen is an awesome trade, but that's not my style. I'm a trader that likes to trade, like I like to build positions and trade it back to, inefficiencies. So I trade huge support levels, huge resistance levels. I trade big price patterns, and the yen sometimes just doesn't cooperate at all. So, all right, buy a nice gold detector and dig some gold out of the ground. Yep, probably. I'm sure that's what everyone's going to be doing. So I was joking earlier, like, yeah, it's, the granny indicator popped up and said, what's up with silver? And that's coming from like an 80-year-old that has no idea what trading is. So that was my, like last night at 9:00, I was like, probably a sign that the markets are maybe going to do some corrections if everybody's talking about silver. So it's funny how that played out today with a giant indecision candle. Like so. I mean, look at this volatility in the last couple of days. This was a 10, that's an 11, that's a 12.5% candle on the 26th. And this today was a 12% candle. I mean, you have 2 days in a row, 2 days in the last 4 days of 12+% swings in the market on silver. You know how boring silver was less than a year ago? That's not boring now, but with great volatility comes great responsibility. So just watch your butts. But makes sense. You're more careful. Yeah, I know, but it's not how I trade, right? When I trade currencies, I like to do stuff like this. When I trade currencies, if I see, let's say the market breaks here and it's, falling, right? What I'll do is I'll wait for a trend line and I'll look for some structure. I'll buy it here. I'll level in and I'll trade it back to a inefficiency. So this is where I like to play a currency pair like an Aussie CAD because it typically finds a lot of efficient levels. The yen, when it decides to do something like this, the yen could just go like that. And I'm sitting here trying to trade an inefficiency and I'm stuck in a 500 pip drawdown. I'm like, gosh darn it. So that's why I don't like to trade the yen. It doesn't fit how I like to trade. So I've recognized that. And, I'm not a good yen trader because it's a currency pair that for 3 months does whatever it wants and you got to chase it and follow it. And then 3 to 9 months later, it does something totally different. It's all trend or it's all chop. So you have to make the adjustments to follow what the yen is doing. And when it breaks and changes behaviors, it's totally crazy. So And with a country that is on, 220% debt to GDP, and somehow their index is at all-time highs, and the yen is one of the weakest currency pairs in the world with negative interest rates, is like, what do you do with that? You can't look at 30-year charts and say there's historical highs and lows that matter. The Swiss is at all-time highs again. It's like you can't stop that thing. At some point, maybe it behaves, but I just don't hold my breath. So, anyway, all right. Yeah. Daniel does remember that was 20. I think that was 2022. 2022, I was dumb enough to short the dollar yen, and I got stuck in about a 3,000 pip drawdown. Fortunately, I was hedged on Aussie yen long, Euro yen long, pound yen long, so that got me out of trouble. But I fought that damn thing for 6 months, 8 months until I got out of it. Now I did work it out in a profit. I can go back and walk you through the story here. That would have been, yep, this was it. So this is when I was dumb enough to short the yen. That's when I got on the wrong side of the move, and I held this MFer all the way to 150. So this trade, I was upside down, and you might be asking, well, Chris, why didn't you just stop it? Well, obviously, in hindsight, that's easy. Okay. But I actually had some really good technicals to say we're going to hit the 200-day moving average. It didn't. In fact, I was down 3,000 plus pips. So anyway, I had a plan where every 1,000 pips I'd stop out and I'd reallocate, and every 1,000 pips I'd stop out and I reallocate. And so I built up a position where I took losses and losses and losses, and then I stacked up more trades. I added more here. I had a pattern. It went high, low, lower, high, lower, low. I got out at symmetry. All the losses turned into a net winner. And what cost me maybe 3K on the way down, so I was minus 3K, ended up making about 10K on the way back. But it was not fun. Why did I do that? Did I get paid swaps? No, because I'm short. So I was dumb enough to pay swaps. Now the hedges, I got paid swaps. I was long Aussie yen, long Euro yen, long pound yen. I got paid swaps. So it was about a wash. But netting profit on the dollar yen was great considering the other trades were hedged. And so, I mean, net it helped me make money. 2022 was a really challenging year to trade. We had a 9-month bear market in equities. We had currencies with crazy moves on the yen and the dollar. And so, I mean, I managed to, pack away about 20% for the year, which was great considering a lot of those gains came in, inflation trades and energy trades in the first like 4 or 5 months. And then the rest was just holding on for whatever income I could muster up. But it was not a fun year. So that's trading though, right? All right. Anyway, I've been going long enough. Let's wrap it up there. It's been a first final hour session. So I appreciate y'all being here. Kindly click that thumbs up button for me. Give me a little love in the algorithm. See if that YouTube channel can start getting out there. I'm doing obviously less final hour sessions, but I love to do them. And it's fun spending time with everybody. So come back and join me tomorrow. We'll be back tomorrow. Daily profit play here, 9 a.m. in the morning, and then a 3 p.m. final hour session. Come back and see where all the fun is going to happen at the close. All those key level trades. Let's see what happens around these prices tomorrow between SPX and XSP, some bonus trades. Let's get after it. Let's hopefully get some profits tomorrow. Okay, good stuff. All right. Need sleep. All right, get some sleep. Daniel, I tell a lot of traders about that trade. Yep. Easy lesson there is don't trade the yen. I know from this one guy who did it once. But again, if you like it, good on you.